market for multifamily right now?
So it's a great question, and I'm maybe a little bit of a contrarian, um, because I don't believe one can actually time the market. So in my experience, the bottom of a market, a top of the market is only known 6 months after the fact. Now,
Right.
maybe you got a crystal ball and you throw a dart. The other thing I've noticed in my years is when the market shifts, it shifts quickly. It can be booming, and then if it starts to turn, it turns quickly. If it's struggling a little bit, once it turns up big time. So for me, I look to buy quality property in quality locations. And if I find something tomorrow that makes sense, that I can make the deal pencil, that I can make the property self-supporting. And what I mean by self-supporting is the rent covers all the expenses, covers all the debt. There's a little margin left over, not a cash flow, not so much that the cash flow is going to make you rich, but the cash flows that protective layer where if you're at a 5% cash flow, you've got a 5% buffer while the property's still supporting itself. So if I can find a quality property, quality location at a price that I can make work, I'm willing to buy it tomorrow, even if I know the value is going to drop in the next 6 to 12 months.
Hmm.
Because for me, I don't care what it's worth a year from now. My finish line is 5 to 7 years in the future, right? So I think we're still in a little bit of turbulence in the multifamily market. I think we may still see some declines in value, but I don't think they're going to be huge. And if you can find, again, quality property, quality location, go ahead and buy it. It would be like, let me make an analogy. If Apple stock today was 80 and the rumblings about earnings was that it was going to drop to 75, but if you believed in Apple was going to be 120 a year from now, you'd buy Apple at 80. And if it dropped a little bit, no big deal because you're on a winner. I mean, Warren Buffett, pretty smart investor, said, I'd rather pay a fair price for a good company than a good price for a fair company.
Wow, that
Meaning quality wins out, and quality wins out in real estate. So maybe a little short-term turbulence, long-term I'm bullish. And I guess the other thing I would say, and I've been through a lot of cycles in my day since 1978. I don't have to recite them all, but a lot of ups and downs economically. One, as much as people want to talk about negative issues in America, I still believe we have the strongest economy in the world. And I and we're now hearing rumblings that China is struggling, and who knows what you get out of China, whether it's true or not. They always puff up these big economic figures, but I believe in America. I believe in the American economy. I'm bullish long term on the American economy. We have a housing shortage. So, in my mind, long term buying housing is going to be a win. Um, Investors all over the world want to invest in America, right? One, because it's a good place to invest, but another reason is their capital is safe. So people in other areas of the country, particularly China, let's say, uh, they're investing here to preserve their capital. They don't care so much about the returns because they live in an environment where that capital could be taken from them.
Right.
And if you look at the economics of Europe, I would say America's doing better. So I'm bullish on the American economy, and that's why I'm still looking to buy. So that's my crystal ball. I will agree. I don't think rates are going to come down as soon as people think, but I will say, once they start coming down, you better be ready to jump in the market because everybody else is going to be jumping in the market. And that's why I don't try to time the market. So right now we're buying stuff. We've actually switched to buy new construction because some of the existing deals don't make sense. So we're buying new build to rent product duplexes from builders because builders are motivated sellers. They build to sell, make a profit. That's their business. They're not holding long term. We're paying 7% debt. I paid 11 3/4 for my first house in 1980. So 7% debt doesn't make my head explode. We're paying 7% debt. These new build properties will cash flow. We're having to put about 45% down. But if rates even drop to 5%, from 7 to 5, our cash flow is going to go through the roof. And we could probably refi and return capital. And we own brand new product in a growth market. So we like it. And maybe the value drops a little bit, but we're not really concerned. It's the long-term thing. So that's how I kind of do it. I realize maybe a contrarian, but that's how I kind of do it.
No, that is so smart. This just